Good morning and welcome everyone to the Money Control live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Indian equities are set to mostly open and higher despite mixed global cues. Global stocks, at least the US stock market, ended in higher on Monday with S&P 500 closing at a new record close. S&P 500 hits sixth record closing high within this month. Talk about Asian shares. Well, they fell on Tuesday, hurt by the court-ordered liquidation of a property giant, China's Evergrande. That's the one that you need to look out for. Perhaps a bit of sentiment impact there. But what really is going to set the stage today would be the performance of RIL yesterday. Well, perhaps needs to be seen if large cap stocks, or rather the economy-facing stocks, could rather see a big uprun after the giant or the market leader RIL put up a good show in the previous session, rallying more than 5.5%. FII and DII data. Well, FIIs turned in the net buyers in cash segment after selling in the previous 7 days. Well, they bought shares to an extent of 110 odd crore. That's a minuscule amount, but the trend has been snapped nevertheless. DII, they've purchased equities to an extent of 322 odd crore worth of stocks on Jan 29th. Talk about earnings that you need to watch out for in today's session. L&T, that's the one that you need to keep a close eye out on. Dr. Reddy Laboratories, Bajaj Finance, PB Fintech, Adani Total Glass, and Blue Star, Cochin Shipyard, JBM Auto, KEC International, KPI Tech, Mahindra & Mahindra Financial Services, VIP Industries, and Voltas will be some of the names that you need to keep a note out on. Essentially, these are going to be the earnings which you need to watch out for. Well, essentially, if you look at the market trend right now, we've seen some amount of support rather coming in from RIL. All the large cap stocks have been doing well. What has not been doing well, and perhaps the markets could see in more gains, if HDFC Bank starts participating, because that's the one which is perhaps facing a bit of pressure and it's keeping the gains in check. But even if HDFC Bank's fall, or let's just say decline, has been capped at this level, one could see some amount of more exuberance coming in for the markets. Well, the positive bit is that we are expecting, or let's just say the market community is expecting in more gains to come in, or a build off on gains in the previous session. But to give us more perspective on the Nifty levels and few stock recommendations, we're being joined by Brijesh, who heads the technical and derivatives retail research at IDBI Capital Markets and Securities Limited. Morning there, Brijesh.
Yeah, morning, Nickey. Yeah, so
go ahead, Brijesh. Tell us the levels. You think more of a trade setup first? Do you think more gains coming in for RIL and essentially Nifty?
Yeah, so specifically the way Reliance moved, I think this continuation of momentum will be there. There is a chance, if I look at the derivatives data, it talks about 3,000 level on the RIL. So there is a chance maybe next couple of days, Reliance should approach 3,000 mark. So that momentum will be there in the Reliance. And coming back to Nifty, so Nifty yesterday, whatever the gains, obviously because of the Reliance, overall the structure turned positive. We always believed that there would be a bounce back in the market, and we expected 21,800, 21,850 to be the resistance zone. So now I would like to wait for a day. I would like to see the levels of 21,800, 850 on a closing basis. If market doesn't close on a strong note above those points, then I think this is a pullback, and post budget, their market can again come down. This is mainly because I'm talking this because of the FI data on the index future. They are heavily short in the market.
We got your perspective there. Just hang on just a bit. We'll quickly address the market open and come back to you in just a jiffy. But 21,800 mark, a close about that is what Brijesh is anticipating to see some amount of sustained recovery in the market before making any fresh moves. But here it is. We have open above that 21,800 mark just at the open. A bit of dip coming in, flirting around with that levels. 0.3% clocked in early deals for Nifty. A bit of participation coming in from Bank Nifty. 0.5% of gains coming in for Bank Nifty. Let's pull out RIL and HDFC Bank and then graduate on to the top gainers and the top losers. RIL, well, another level, another day, another gear, bunch of gains coming in for RIL, rather some gains traction seen in the early deals itself by the index heavyweight. and HDFC Bank. Let's pull that up. Well, there we have some amount of participation coming in even from HDFC Bank. The trend in the morning deals at least looks sanguine. Top gainers and the top losers. Before we move on to our discussion with Brijesh, who has top recommendations of the day, DRL, Wipro, Hindalco. Well, these are some of the top gainers that we have in today's session. Tata Motors, Infosys and Bharti Airtel. Well, some of the other top gainers on the list out there, along with TCS, Cipla and Tech Mahindra put together. Talk about the top losers and the top, beg your pardon, just the top losers now. It's the Bajaj twins essentially, which are actually dragging the markets a bit lower, a bit of pressure exerted by the financials. NTPC, well, that's taken a bit of a hit out there. ITC, which is reported in the numbers, is also sulking with losses to close to 0.75% or thereabouts. Power Grid along with L&T. Well, L&T is also the one which will be reporting in the numbers today, and a bit of weakness witnessed in by the counter. Adani group of stocks, which almost were nearing around that 52-week high levels, have witnessed some amount of profit booking in early deals today. Coal India is also one of the top losers. Well, all the economy-facing stock, let's just say NTPC, Coal India, L&T, they've been taking a hit. Clearly, RIL rally hasn't really triggered a very big rally coming in for these names. But I'd also like to pull up the small cap and the mid cap performance out there just to see if it's just the large cap counters which have been doing well. And there we go. Well, mid cap, you're looking at gains to an extent of 0.5% out there. And for small cap index too, let's just see if there is fair bit of participation coming in from the small cap index. Well, 0.75% of gains coming in for the small cap, a bit of outperformance, I'd say. Brijesh, coming back to you. Well, your strategy now that the market has opened in a bit higher as we anticipated, your view coming in on essentially HDFC Bank, ITC and L&T. Three names there.
Yeah, so I think to start with HDFC, there is a positive momentum, and I believe this we'll see another 50 points kind of a rally in HDFC Bank. So I'm quite positive. I'm willing to take a buy call at the current price with the day before low, like yesterday 1445 was the low. So somewhere close to 1440 with a stop loss, since this is a technical pick, I would play for 50 points kind of a move in HDFC Bank. It's a positive view. If you talk of ITC, so again, ITC is looking, it's slightly, corrected, but then I think for the levels of 440, 435 are the multiple demand zone. So I would also like to take a slight aggressive view on the ITC. I would be looking to add the long positions because this is a multiple demand zone at 440, 435. This was the level from previously the ITC has rallied. So again, a buy setup. Nifty, I would be cautious, not too much of an upside. Maybe another 30-40 points can be seen. 21,900 currently. So 22,000, there is a lot of call writers. So definitely that will act as a resistance for the deal. By any chance, if 22,000 is taken up, then my view would be a little bit on the further higher side. But right now, 22,000 will be the cap for the maybe today, tomorrow. That's what data is suggesting.
I'd like to address in stocks and news, and if we can pull up Bajaj Finance, it's a bit off the grid of the lineup that we have, but Bajaj Finance is the one that really needs a bit of mention here. 4% downtick in early deals for Bajaj Finance. The earnings clearly has missed the street estimates for the quarter ended December 2023. But the brokerages, if you see, they remain bullish on the stock as they believe that the company has seen in light hiccups like higher loan losses and provision during the quarter under review. Its performance has been well in the guided range, but the stable asset quality and the strong AUM could drive the earning profile. Well, in Q3, Bajaj Finance recorded in the consolidated net profit of 22% hike there on the back of increase in NIMs and improvement in asset quality. However, the figure has fallen short of expectation from the money control poll of 6 brokerages, which had estimated a 25% increase year-on-year in the net profitability figure. So clearly some amount of misses, which hasn't really augured well for the counter. ITC is another one, which of course Brijesh also spoke about, but let's pull in the earnings of ITC. The standalone revenue has increased by nearly It's a flat performance. Look at that. It's got reasons there, right? Top line is just less than 2% kind of a growth. The growth has been driven by the cigarette and the FMCG segment. There's a 10.75% growth in the standalone net profit. Operating profit also hasn't really been, it's been a weak number there. So that's that when it comes to ITC performance per se. Vodafone Idea, it's managed to reduce in their losses, but still you could see the revenue has also fallen by 0.4%. Overall, the losses have come in now at 6,986 crore as compared to a number of 8,738 crore. ITC also isn't doing too well. Marico, revenue nearly down by 2%. The domestic volume growth just at 2%. Really, I mean, it is a bit of, I would say, mixed numbers of sorts. The volume growth isn't typically very impressive, but we're seeing gains to an extent of 0.5% out there. The net profitability is up by 16%, and the growth is despite the lower top line growth on the back of healthy operating performance and fall in input costs, which essentially is working well in the favor of the company. Brijesh, your view now on Bajaj Finance along with Marico. These are the two stocks that I'd like to talk about.
Nickey, so specifically Bajaj Finance, if you see on the 23rd of Jan, there was a huge sell-off and the stock was down by 3%. And that was the day when it broke the 200-day moving average. And from that particular day, the stock is turned negative. And if you see the high of that particular candle was 7,300 marks. So my sense is that this has turned negative for quite some time. And until at least 7,300 is not taken out, I don't think there will be a reversal in Bajaj Finance. Though fundamentally it may look good on charts, but then this being one of from the F&O space, there would be short positions in the market. I think further corrections is expected for close to 6,600 mark. So we'll wait for those levels to be tested, and once we see those levels, then I think we need to review. But right now we need to talk of another 200 points on the lower side. Coming back to Marico, so Marico is like, it's neutral. It's looking, there was a breakdown, but then 530 is a level which one has to keep a watch on. If stocks regain strength above 530 mark, then the positive momentum can continue. But right now, this on a smaller note, 530 may act as a resistance. So we need to keep a watch on those points also.
All right, Brijesh, we're just going to leave it at that. And thank you for taking out the time and having this conversation with us. All right, let's navigate our conversation now to Sandip Agarwal, who's the fund manager at Sowilo Investment Managers. Morning there.
Good morning, Nickey.
All right, Sandip, your assessment essentially on the market scenario right now in the run-up to interim budget, that's A. RIL seems to have set the stage for large cap rallies, but economy stocks aren't really typically doing well in today's trade at least. What's your assessment both on the levels of Nifty and the strategy one could take look at? And also, do you think the surge in RIL kickstarts or sets the stage for large cap rallies right now?
So yeah, Mickey, see, this is the way we look at markets, right? So for example, as you rightly mentioned that, large cap rally has been kicked off with Reliance a little bit, but have not seen follow-up rallies because, the big banks are not yet performing like HDFC, Kotak. And the reason, if you see why they are not performing, I think it is, I won't say that it is a very big problem. There is a deposit lag versus the credit growth. And because of which the costs are going up slightly. And because of that, I think there is a perception that, these banks will not do well. But I think, if you consider two types of problem, bad problem and a good problem, I think this will be somewhere close to good problem to have where, at least the economy is showing sign of doing well. The credit growth is maintaining or growing. The challenge is that deposit mobilization is not to the extent which should be there to, maintain the cost or increase the profitability. So I think this is a temporary phenomena and should, over next 6 months, I think this phenomena will be rectified and we will see, once this recognition comes in, we will see that, the large banks also start performing. That is part one. Part two, on the Nifty point, as you said, while it looks, it has run up quite a bit, but when you have a clear runway of economy doing well, political stability, we have seen, the markets can, go up very significantly. If you recall in 2004, markets went up by 70-80%, Nifty rallied by 70-80% in a short span of time and then corrected by 20%. And then from 2004 to 2007, we saw the Nifty going up 3.5 times because economy was doing well, global economy was doing well. So I think, there will be some pauses in between after such sharp run-ups, but I don't see any stress on the economy front or any concern on the economy front, which should not allow market to do well. I think market will have some small corrections, but will enable it to have a bigger jumps. That is the way we look at the markets.
All right, point well taken. Let's talk about these, FMCG companies, something like ITC, which apparently has lost quite some ground in the last 1 year. Correct me here if I'm wrong. 5 to 6% lost and wiped out for ITC. The numbers aren't really that impressive either in the Q3 earning report card. And if you talk about Marico, well, there also you aren't really seeing a significant uptick when it comes to the volume growth numbers. What has come in as a solace is the receding input cost pressures, which has actually led to a bit of uptick coming in the operational performance and a saving grace for Marico. How do you look at FMCG baskets right now?
No, you are absolutely right. We are not seeing great set of numbers there. But for example, if you speak about ITC's yesterday number, you will see that, the major disappointment was on the volume of cigarette. And I think, with taxation remaining benign, that volume pickup will happen. It is a transitionary phase, maybe 1 or 2 quarters, you will see some pressure. But I think finally it will catch up. On Marico, as you rightly mentioned, input costs across the industry, we are seeing some solace. But volumes are not picking up, demand is not showing up so strongly. But I think, with interest rate cycles picking out and also the kind of distribution which has happened in the rural economy, I think, it is a matter of time. You will see good amount of growth coming back there also. So I will say that, obviously, FMCG stocks, because they are always priced to perfection, and right now people are trying to play the economic boom. They may not be the first beneficiary of that. But I think these are stocks which you should have in your portfolio from a long-term perspective. They provide you the most important, stability in your portfolio. And when whole market does well, economy does well, the benefits will reap down also, and that will show up in numbers. So it will be a late recovery, I would say.
Sure. Also we have a new listing today, EPAC Durable, where the analyst expects the stock to open somewhere between 235 to 253 against the IPO price of 230 per share. The listing might just be, the range is expected to be in the 2 to 10 odd %. You think tides are now slowly not really turning in the favor of the IPO listing? The whole trend of perhaps chasing that listing pop, which was a culture that was seen in the previous year, might not be replicated this year, at least till the time we have some clarity emerging from the election point of view and, of course, the budgets which are being clearly drawn. What's your assessment?
So, Mickey, as a policy in our fund also, we don't try to, accumulate too much, or we don't try to chase IPO stocks, because, a company should at least show its formal post IPO, how they are able to use the funds, what is their capital allocation, how efficient they are in execution. We should take at least 4, 5 quarters, 6 quarters to understand those things before we buy any stock. So I think, all this frenzy of IPO gains and all this may be, very much relevant for people, for retail investors, someone who wants to benefit because they get small quantities, so they want to participate in most of the IPOs. But from a fund perspective, I think we need to see performance of the company post listing for 3, 4 quarters to take a bigger bet, because we are okay with paying some 30-40% premium post IPO price, but we would be willing to buy larger quantity in a high conviction idea, and that is where you create wealth. In short term, we may miss something, but in long term, that is the way we look at it. And I think that recognition is there now, and we are seeing that a lot of knowledge and education is happening at the retail and HNI level also. And because of that, we are seeing that people are willing to buy stocks which are already listed, trading. They have given good performance, so they are getting more keen towards that. So I think, and also there is some regulatory checks which are happening. So I think that is also bringing some sanity in the space, because the kind of oversubscription which we are seeing in small IPOs, that was unbelievable. And I think that is that really is worrisome, because it may end up that people may lose money. So I think right now some sanity coming back is a very good thing to happen.
Okay, one last question that I have for you here is not a bearer of good news exactly, but that's also the one that I'd want to talk about. India has seen the biggest FII outflows in Jan amongst the Asian markets. Of course, there has been a bit of subdued corporate earnings also at play. Was a valuation. The parallel is drawn between what they've delivered versus what they've been commanding. That's a bit of. How do you read that typically? And within that, which other sectors do you still think are pockets of resilience or pocket of strength right now, which perhaps are really not demanding that kind of premium valuations?
No, so I think, you are right that in January, surprisingly, there has been outflow versus, what was the anticipation that with so many positive developments happening, there should have been strong inflow. But we also have to keep in mind that, the local market from primarily, if you see the US market itself, NASDAQ, surprisingly, no one is talking about. It has given 55-60% return. Microsoft, which is a very, very big company in market cap, I would say a very, very large cap, that company has given 67% return in last 1 year. So, there is no very strong reason for a lot of money to leave those market where it was available at NASDAQ itself was available at 10, 11,000 and to come into Indian markets. And that is the reason we were not seeing inflows at that time. After that, we saw some inflow in last couple of months. And now again, we are seeing, some kind of reversal. But I think, there is also some built up of elections coming and all that. I think in next 2-3 months, you will see again FII flows will come back strongly. And also right now, our domestic flows are so strong and they are obviously chasing the business which they understand. And that is the reason you are seeing that mid cap, small caps are outperforming the large cap. But once FII flows start coming in, then again, large caps will also have the rally of their own. So I think it is a matter of time and I don't see it as a big issue.
All right. Also, your view coming in on Bajaj Finance, typically, it's the stock which has not done well. 4% lost on that one. A bit of disappointment coming in terms of performance of the asset quality and the loan book. How are you reading into it and what's your assessment? And also, coined with that is the question of HDFC Bank. It has been a disappointment through and through. Quite some beating on this one. But do you sense some amount of recovery coming back to HDFC Bank as well?
No, as I said, HDFC Bank, there is the deposit growth is an issue. And I think in next 6 months, I believe that, that issue should be resolved to some extent. And when that happens, then I think we will see good recovery. Also, HDFC banks and these large banks obviously are favorites of the FIs and the large institutions. So when that interest comes back, you will see some recovery. For the time being, I think, people are concerned about the lagging deposit growth versus credit growth, which is impacting their margins. And I think that till that concern gets overall, there is some clarity on that concern. We may see that this bank still, underperforming. That is the way it looks like. And on Bajaj Finance, I think the challenge is that they have increased their credit cost guidance by 20 bips. So the premium which they used to command 3-4 years back for high growth and also very good asset, very low provisioning, I think that premium has gone through time correction. And now from a valuation perspective, it looks decent. But, obviously this credit cost guidance going up and other things, these are something which may not be taken very positively by the investors.
All right, sir, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation with us. But there is enough and more lineup for the day. We just don't end as yet. Days ahead of the budget, which direction will markets swing? Catch Markets veteran Ramdev Agarwal, Joint Managing Director, Motilal Oswal views on strategies for 2024 and more at 12 noon right here on Money Control. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Do tune in for more.